Good morning, everyone, and welcome to the morning market homework session, Quantum Leap, on Wednesday, March the 12th, 2014. For those that don't know who we are Quantum Leap. We are a self-organized learning environment. We have a private Skype room, and we have these morning sessions every day at 8:45 Eastern Time. What we do here each morning is we go through the macro to the micro. We look at the key numbers, we look at the key levels, we look at the trends from the macro down, and then we do our analysis on our charts and determine where our trade levels are and what our probable rotations are for the day. So if you're interested in finding out more, this is not a commercial venture, this is a private venture. You can send me a email at d.mckay@stealthtrader.com and we can talk. But before we get going, we have to get the legals out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please do your own due diligence and trade your own plan. All right, so if you're joining us new, we do a routine each morning, and we start with the macro to micro. If you're watching this on YouTube, you might want to skip ahead to get to some more of the in-depth chart analysis. But we do this routine because we're preparing for trading, and there is no shortcuts in trading. You have to do your homework. You have to do the work. So looking at the key numbers, of course, the big number that we're watching below us right now is this 1837.75. We have a month low right now at 1832.25, but 1837.75 is our year open, so we're watching that very closely. Of course, we have an all-time high and a new high, which is put in the Globex, not in the RTH session, at 1887.50. Nothing else really jumps out in terms of the macro numbers, so let's go right down to the intraday. Yesterday's Globex, we opened up at 76.25, had a high at 80.75 and a low of 73.75, and we opened out of range, just out of range at 1879.50. So we had an open auction out of range. Remember yesterday we were talking about the fact that a neutral day has a high probability of being followed by a neutral day, or at least a rotational day, and boy, we had a beautiful rotational day. In fact, let's just go take a look at that because I wanted to go through the levels that we had set up yesterday. So let me just bring up the chart from yesterday. So this is our homework chart that we had, our levels that were set up yesterday. Of course, we were talking about trading off of this 78.25, and if we stayed above 78.25, to look for the rotation up to our first target up here at 81.75. But if we got below the 82, we are looking for the first target down here at the prior naked VPOC at 1873. We came down, we broke back into, I stayed on yesterday morning, and we actually called the trade to get short when we broke down into this 1873. They found buyers down here, buyers stepped in, took us back up, tried to break us above the prior day range, took us up to our first target at 81.75. Seller stepped in at 82.25, rotated us back in, got back inside of range, got back inside of value, and then took us all the way down, played out the 80%, the value area 80% rule that we talked about yesterday morning. The value area trader stepped in, tried to hold us up, rotated us back up, and then we just sort of chopped around. As we said, it was going to be rotational, broke down, came all the way down into 67.50, and just rotated back up, and then that's when the sellers really stepped in and took us down, tested the range low at 65.75 and that key level we were talking about, and then went down, and we said if we broke that level to look for the first target down at 63.50, and they hit 63, and then we basically just chopped around. So right now we're trading down here at 18.59. You can see that the key line in the sand that we were talking about yesterday was it's 18.60.50. And we're going to talk about that more. But let's go back to the numbers, get those out of the way, and then we'll get back to the chart. Let me just get rid of this. Back to our homework sheet. So we had a neutral day. We had a 2.5 point opening swing. Again, if you're following our analysis, we always look for clues that the market is giving us, and any opening swing that's greater than 2 points or more is going to lead to a rotational day, because your market on open orders have a variance, a discrepancy in perceived value. Our initial balance high, 1880, initial balance low, 7150 for an 8.5 point initial balance, pretty standard. You can see that we've had 2 days now where the intraday, the RTH numbers were basically a little bit lower, everything except for the higher high, but the 1230 number, the low, the close, and the VPOC. The VPOC was basically stolen near the end of the day. We'll talk about that. But we're seeing some weakness coming in here, and we're testing and breaking that that all-important area at 1860, 1859. The 20-day ranges right now are running just under 14.5 for the RTH, just under 17.5 for the full session, and just over 10 for the Globex. Value area, 3 days lower value area. So we're accepting value lower right now. So this is showing some weakness. And again, we were talking about the fact that the IV break has been shifted, and we're making that break closer to that 10 o'clock Central Time versus where it usually does between the 9:30 and 9:45 numbers. So this year, since the beginning of the year, the most average time for initial balance break, which is your first hour high or low, is right around that 10 o'clock time Central. So keep an eye on that. That's a shift and a change that we're seeing in the marketplace. Extended session was lower, and we again had higher than normal volume at 1.3 on the RTH and 1.6 on the full session. Going over to the daily report, our full session high so far in the Globex 1866.50. I think did we put in a new low? Let me just check to see if we put in a new low because we're trading. Yes, we just did put in a new low in the Globex at 1857.70. 1857.50. So let me just change that on the homework sheet. This is dynamic. It is a moving target right now. 1857.50. So based on the current high and low, the full session ATR, 20-day ATR target to the upside 1875, and to the low side 1849. And that 1849, 1848.75 is a key level for us below 1860. That's our first target below. So the 20-day ATR target is matching up with our composite target. Going over to the news, we've got crude at 9:30, we've got 10-year bonds at noon, and then we've got federal budget at 1. But the big thing is they're talking again, and there's leaks that the Fed is still thinking about tapering the QE. So I think there's more headline news in this. I think that this anybody from the Fed or the Treasury that's talking could spark some change in value. So just keep an eye in around that 1 o'clock. There could be some sparks from that. So let's take a look at the macro to the micro in terms of the trend. I always start with the monthly. You can see monthly is very strong. All my charts have a 20 SMA and a 9 EMA. Those are the two moving averages that I watch. You can see we've got good slope and separation. Of course, we've got a bit parabolic on the monthly, and we're trading in the upper distribution of the prior month. We were above it, but now we've come back inside of last month. But the trend is still very much intact. I mean, even if we come all the way down, until we get below this one trend line, that could take us all the way down into the 1600s, the overall larger trend is still very much intact. So we're due for a retracement, but that doesn't mean that the trend is changing. Going over to the weekly, same thing. We've got slope and separation. We've got a bit of a technical gap. Close of the gap is going to bring us into that 1838, 1840 area. That's a key area for us, and I'll show you why. It's actually 1840, 175, 1840, 150, but that is the microcomposite VPOC of the balance that we broke out of, and it's also key on the geometric chart as well. But the trend overall on the weekly is very strong still. Going over to the daily, you can see that we had this technical gap that we had been talking about the last couple of days. We came down and closed it out. We now have broken below the 9 EMA on the daily, coming down here to test the 20 SMA, and that's going to be at that 1849.75, 1848 75 area. So again, you can see how these levels keep playing out in terms of our targets, in terms of the various methodologies and the confluence that we're seeing. Let's take a just quick look at the geometric chart. I know this looks confusing. I've got four main Fort Andrews pitchforks here. There's the long-term one that we've been watching for a very long time. We've got the new one, which is the red one here that I drew beginning of the week, and then I put the opposing fork in because we put in a new high. So the opposing fork is this, I'm colorblind, so I'm not sure what color this is, but it's a bluish type color, maybe purple. And then we've got this intermediate fork, the light colored fork that we drew in last week. And we've been talking about this energy point. And this energy point between the lower line of the longer term fork and the intermediate term fork we've been watching now for a couple weeks, and this is looking like it could come into play, and that's going to take us down into the 1839, 1840 area. You can see there's that 1840 level again. But right now what we have to concern ourselves is we failed to break out of the downward sloping opposing fork, and we're coming down to test the center line, and the center line test is going to be also the test to the 20 SMA on the daily, and that's going to bring us into that 1849, 1850 area. And then, of course, if we do get some further moves down and we get some weakness, a test of the lower line of the long-term fork is going to take us down into that 1835, 1836 area, and that's a key CHVN from the balance area that is below us. Of course, if we do pop up, I'd look for a move and possibility of coming back up and testing the upper line here at the 1882, 50, 1875 area. Let's just go take a look at the intraday trend to see where the trends are coming into the morning session. You can see that we were in this consolidation the last few days on the 4-hour, but the 4-hour has broken down and we're getting slope and separation to the downside. So the 4-hour is saying that the trend is starting to change and we're starting to see a trend to the downside. Going to the 30-minute, that confirms as well that we're getting slope and separation. Now there are some naked crosses up here in around on the 5-minute, there's one at 1865, on the 15-minute there's one at 1877, and on the 30-minute there's one at 1865.50. So there's still, there's still unauctioned territory above, and that's why I'm saying we could get a smaller retrace, but we have to look for areas where those responsive buyers are going to step in, because there's still, in my mind, a possibility that we go up and test these higher levels. Let's just drill down one more time to the 5-minute and see what that looks like. You can see this is a beautiful technical gap. Technical gap is where the price action moves away from the 9 EMA too quickly. And if you do your research and your homework, you'll always find that these technical gaps will be closed either by time or by price, usually a combination of both. But this was a beautiful technical gap that was created. We came up, we just closed the technical gap in the last 5 minutes, and we're trying to get back above the 9 EMA. So the trend is not as powerful on the 5-minute. We're kind of finding some balance here, and we'll find some buyers, and they're stepping in. So let's take a look at the big picture. on the composite and see where we are on the key levels. Now, you can see that we came up and we established value and balance in around this 1842, 1841.50 area, and going through the February 14th through to March the 3rd, our most accepted price was 1841. They tried to hold value higher here at that 1848.75, and that's why I'm watching this area in the 1848, 1849, because before we tried to break out, failed, came down to pick up buyers again, went down to that 1832 and a quarter, and that 1832 and a quarter was the larger microcomposite VPOC, going back to that microcomposite that was from December 23rd through to January 23rd at that 1832. Where are they going to go to find buyers? They're going to go to areas where they previously found value, and those are going to be in your microcomposite VPOCs, and that's why I track them like I do. And once we came back up here and established, we broke out, we came up here, and we created balance over the last 6 days, and the most accepted price in the microcomposite VPOC is 1871.50, 1871.75. But we said the key level now that we've got to hold is this 1860, 1859 area, and you see we're trading right there right now. If we can't hold this level, you're going to look for a rotation down to this 54.75, but the big number below us right now is this 1848.75 CHVN, 1848.75 4-day microcomposite VPOC. It's also for the time period of this overall balance that we are in around this 42, it's the value area high, and the value area high is right there at 1850. So if we can't hold here, they got to go down, they've got to advertise for buyers, and likely the buyers, they're going to take it all the way down here to this 1848 to 1850 area, and that would be the first spot where I'd look for responsive buyers to step in. If they can't find buyers there, then the big number below us is all the way down here at 1841.50, the microcomposite VPOC. And then, of course, below that, we've got that 36.50 area, and then the 32 and a quarter, and that 32 and a quarter is the prior microcomposite VPOC. It is the right there at the value area low. 70% of all the value in this microcomposite, this balance around that 42 area, was between the 1850 and the 1834 area. So once we get back into this value, they're likely to accept value back down here, and we're likely to come down and test this 42 and could chop around these 3 distribution points of 40, 42, 37, and 32. So just pay attention. And then the big one below that is all the way down here, and what I consider to be a definitive line for a bigger retrace is going to be down at that 1850 area, the CLVN, because if we can't hold there, then we're outside of this this range. We're below the value area here, and we're likely to come down into this 1814 area. And then below that, we've got the 1806, but it's really 1800. Because if we can't hold 1800, the big 2 targets below 1800 is that 1792 area, which was the last most accepted price before they broke out of this balance area, and then the big one down below us is at that 1781.50 area. So that's what we're looking below in a big picture. If we hold above 1860, I'd look for a rotation back up into that 63.50, which was our lower target yesterday, and really the range low from the 5-day balance that we're in. And then above that, you've got 67 and a quarter, but the big number is back up here at this 71.50, and then we're back into value or back into balance, and we'll probably chop around here again. And if we can come up and hold this value up in this balance area, then we're likely to push through. We've got our RTH open, which is at our RTH high, all-time high is at 84.75, and our all-time high was put into the Globex at that 87.50. And generally when that happens, they'll equalize those two out, and the RTH, or regular trading hour traders or participants, will go up and test that number and equalize the two highs. So let's take a look at what happened overnight and then start setting up our chart for our levels. So overnight high is up here at 66.50, which is just below the VPOC, which was shifted near the end. You can see that the VPOC, was higher most of the day, and then at the very end of the day, in the last 15 minutes, as they were closing, they came down here, and the VPOC shifted down. I call that stealing the VPOC at the end of the day. And then our low overnight is 57.50 so far. So put that in, not opening swing, low. And that's just right down at one tick below that naked VPOC right now. And then the overnight VPOC, which could change because we still have 25 minutes before the open, but the current VPOC overnight is up here at 65.50. But that's likely to shift. So this is dynamic, and the market will shift if we get a shift in volume. So taking a look at where we are. So this is completely opposite of what we had yesterday. Whereas yesterday we opened up out of range above the prior day range. Now, today, we're likely to open up below range. And anytime you open out of range and out of value, you have to look for initiative buyers or initiative sellers to step in. In this case, we have to look for initiative sellers to step in, because the likelihood, if we're going to get a rotational day, is they'll come up and they'll test the 63 area and the value area low at 64.75. But if you see initiative sellers stepping in on the open, and those market on open orders are all sellers, then you do not want to fade that move, because we're likely to get a bigger move and a really strong push down to take out the overnight low and take out this overnight VPOC. So key area that we've got, and then we've got this naked close. The 60.50 is, believe it or not, a naked close going back to February the 28th. So we still have that naked close that hasn't been tested in the RTH. So likely on the open, they're going to come up and at least close this 60.50, and that's where I'd be looking for a possibility of initiative sellers stepping in, because that's the key line that we need to hold. So that is going to be an area that you want to look to to take a trade from. If we get above the 60.50 and we hold, get long into 63 and 63.50, which is the the next price, and basically getting in, testing the low of this balance area from the last 6 days. And if we can accept that value, and that's going to be my first target above, by the way, 63, and it's going to be 63.50. But it's anywhere between 63.50 and 63. You never know exactly. But if we can push through and we can hold above that 60, I'm looking for a rotation back up to test the value area low at 64.75 and close the gap. And the naked close is going to be this 18.65 with the overnight VPOC and the overnight high, right there at that 66, 65, 66 level, with the key target inside of that range at 67. So what I would do is I would do another trade zone here, because if you get long off of this this 1860 area into that 63, leave one running, because it's likely to go up here and test it, and then if it breaks through, then you can get continuation into back into range from the prior day and up towards this 67, with the secondary target and our main target above, if we get back into value, will be the 71.50 area. So that's going to be our next secondary target above at 71.50. And then with the other side of that balance at 71.50 being up here at this 78. But you've got the value area high right here at 75. So you'd look for a possibility of value area sellers stepping here and selling the value area high. So that will be a trade area right here. And then just if we do break out and we're moving up, the next area and target is at 78 and a quarter. And you can see that that is an HVN in the upper distribution from yesterday. This is a pretty ugly looking profile from yesterday, very rotational. And then above that, you've got the 82 and a quarter, which was our target to the upside yesterday. That's going to be an area watched. And then above that, you've got 84.75 and 87.50 as your extended targets, with the 91 and a quarter above us. Below us, if we can't hold the 60-50, look for them to come down and take out the overnight low. And remember, you've got a 96% probability of taking out the overnight high or the overnight low. Below 60, your probability is shifting, and it's pretty high down here at this 57.75 and 57.50 area. So that would be our initial target. Below us, I'm not going to mark it as a target because it's pretty obvious. It's our overnight low and our VPOC. And then the other side of that of balance that we want to watch is all the way down here at it's really 55.75. So I'm going to mark it right here at 55.75, and then the targets below, and our main target below is at 49 to 50 area. So we'll just put it right at 49.50, but it's anywhere from this 48.75. We'll put it a little lower. We'll put it at 49, and then below that you've got 46 as your CLVN right here. So that would be your next destination point. And below that you've got this 43 and the main big target, our extended target to the low side at 41.50. And that's pretty obvious, and with the other side of balance being down here at 40. And then below that, I'm not going to mark it on the chart because I don't think we're going to get there today, but you've got 37 and you've got 32. You know what, let's put them on there. You've got 36, it's actually 36.50 that I'm watching. Come on, draw for me, please. And then the big number down in there is that 32 and a quarter. So this button is driving me nuts. Come on, give me a drawing tool. There we go. Okay, so that's our level set up. Let's just take a look at how that looks like on the Keltner channel. You can see that we've got slope to the downside on the Keltner. A test of the upper Keltner takes us up to the 62 area. Really, it'll be the range low at 63. If we hold below that, a test to the lower Keltner is going to take us down to 56. That's going to take out the overnight high and test the other side of balance down here at 55.75. And then if we get above the Keltner, a move up to test the upper Keltner line is going to take us up into the 67 in our overnight high and our VPOC from that late shift yesterday. So you can see how that all plays in. Taking a quick look at the gold chart again. I mean, we talked about, for months and months I've been talking about how important this bottoming pattern is, this descending broadening wedge, and the fact that once we broke out we'd get a bigger move in gold. And then we've been watching this possible cup and handle set up, and it won't give us our handle. This gold, like I said, when you get these type of descending broadening wedge long-term bottoming pattern, sometimes it just takes off and you're going to get a bigger move. But we have to look for a retracement still, and this is a valid pattern that I'll be continuing to watch. I know the right rim continues to go higher. But a retrace for the handle will take us all the way down to validate the pattern of the cup at 1294.50 and now 1251. And this is, this is changing because of the fact that we just don't want to break below. You can see how strong this 9 EMA line. We're just riding the 9 EMA. We're not, we're not closing below this 9 EMA. We haven't closed below the 9 EMA since we broke above it with the breakout of the descending broadening wedge. So this is a pretty strong move. And we've got to get some type of a retrace, and that's why I'm watching the pattern. But when you get a long-term bottoming pattern like this, sometimes it just doesn't retrace and it just keeps going. So take a look at what that looks like on the gold composite. So we've been in this balance zone in this microcomposite now from going back from February 24th to yesterday, and we've now broken out today. And we said if we broke above that 52 area, that the first destination would be this 63, 64 area. We're there. We're trading it right now. If they accept this value right now, your destinations are still the same from the last week of homework. You've got the 77, 78 area with the big number above at that 87, 88 area. And I'm not expecting a much bigger move. Now we've got to look at the fact that we've broken out. Now this 52 area, this 50, 51, 52 CLVN is now looking for support. So we need to hold this to continue the move. If we break below this, look for rotation to test the value area high from this microcomposite at 1345, and if we get inside value and accept value again, the big destination is back down here at the microcomposite depot at that 34 area. And value area low is at the CLVN at that 29, and below that we've got the former microcomposite down here at this 1321, 1322 area. And we're likely to get stuck in this distribution area and chop around between 1350 and 1321 and this 1335, 34 area. This is a pretty big. This needs to be matured still. So if we break back below this key level at 52, then we're likely to come back here and auction further in this distribution zone. So that's what I'm looking at. Howard, do you have anything for us this morning?
Just a couple brief items.
Okay, over to Howard.
Thank you, Doug. So just to start with, take a look at the daily chart. Yesterday, we had a red day that took us and closed right on the 9 EMA, a little probe below, and closed right on the 9 so far during the Globex this morning. We're challenging that level, so this will be a key level to test. And if we close below, then we have the 20 SMA below at 1850. And that will be another support level today if we get down that far. So that'll be another key level. It's been a while since we've closed below the 9 and 20 on a daily chart. So anytime, we've had several challenges of the 9, but we have not had a close below it since back here on February 5th. So we'll take a look at some market breadth. Here's a look at our sectors. And pretty much all the sectors have peaked and leveled off and started moving a bit lower the last few days, matching market price. So it looks like we have pretty common behaviors amongst all the sectors at this point. XLU, which had the leadership position for quite a while this year, has weakened and moved forward, and healthcare has taken the lead. Retail, which was the laggard pretty much all year, is still the laggard, but is caught up with the rest of the pack. Take a look at our advanced declines, and up-down volume, and on-balance volume. And the last
Howard, can I just interrupt you for 1 second, please?
Sure.
I've got to jump on a conference call right now, so can you finish up the session and close it out? I'm gonna shut down right now.
Okay, no problem.
Thanks. Have a good day, everybody. As always, trade well, trade safe, and we'll catch you on the flip side.
So as we observed earlier, advanced declines on a 10-day average basis peaked back here on February 18th. Up-down volume, which is the middle of the three indicators, peaked a couple days later. And since then, market breadth has been waning, even as price in the market had been increasing. So that was a early indication that the market strength was being carried on by fewer and fewer participants. And now we're starting to get a bit of a retracement happening here. But on-balance volume in the bottom here actually continued up with price, showing the same strength as price, and peaked on the same day or just prior, 1 day prior to when the market peaked. So a little bit of divergence between the indicators. On-balance volume matched price, advanced declines and up volume versus down volume showed more weakness. So a bit of divergence. Whether this turns out to be a more significant correction or just another small one, as we've been seeing for the most part, that remains to be seen. We're getting mixed signals amongst our indicators. So that's pretty much all I've got. I'll go ahead and stop the recording here. Everybody have a great trading day. And we'll have homework again tomorrow morning. So thanks, everybody.